Have you ever wondered why some small businesses thrive while others struggle to stay afloat? The secret often lies in financial management. It's the backbone of every successful venture, be it a bustling restaurant or a boutique consulting firm. Skillful management of finances can maximize your profits, save you a considerable chunk in taxes, and most importantly, ensure your enterprise's long-term sustainability. So, if you're an entrepreneur, mastering small business finance management is not just an option, it's a necessity. Now, let's delve into the fundamentals of small business finance management. At its core, finance management is about keeping a close eye on your money. It's about understanding where your income is coming from and where your expenses are going. Consider your business as a ship on a vast ocean. You are the captain, and your financial records are your compass and map. Without them, you're sailing blind. Keeping clear financial records is not just about compliance with tax laws, it's about gaining insights into your business performance. Think of your income and expenses like two opposing currents. You need to track them, understand their patterns, and navigate accordingly. This is where understanding cash flow comes in. Cash flow is the movement of money in and out of your business. It's the lifeblood of your operations, and managing it effectively can mean the difference between your business thriving or sinking. But managing finances isn't just about the here and now, it's also about looking ahead and planning for the future. This means anticipating expenses, preparing for uncertainties, and setting aside funds for growth opportunities. Imagine trying to navigate your ship through a storm without a plan. It's the same with your business. Without financial planning, you're leaving your business vulnerable to economic storms. Remember, the key to effective financial management is understanding these basics and applying them consistently in your business. Managing finances involves not just recording income and expenses, but also understanding how to maximize your profits. One of the ways to do this is by understanding and taking advantage of tax laws. Let's look at some of these key tax law savings for small business owners. First, the home office deduction. If, like many small business owners, you use part of your home for business, you may be able to deduct expenses for the business use of your home. These can include mortgage interest, insurance, utilities, repairs, and even depreciation. Second, self-employment tax deductions. As a small business owner, you're required to pay self-employment tax. But did you know that you can deduct the employer equivalent portion of your self-employment tax in figuring your adjusted gross income? This can significantly reduce your income tax liability. Third, business expenses. You can deduct the costs of operating your business. These costs are known as business expenses and can include everything from office supplies and equipment to travel and meals. By understanding these tax laws, you can save a significant amount of money and increase your business profits. It's like finding hidden treasure on your financial journey. But remember, tax laws can be complex, and it's always a good idea to consult with a tax professional to ensure you're taking full advantage of these savings. Let's take a walk in the shoes of a small business owner. Picture this. It's a bright morning, and our salon owner Jane unlocks the door to her shop. She switches on the lights, starts the coffee machine, and prepares for a bustling day ahead. As clients start coming in, each transaction, whether it's a haircut, a nail treatment, or a sale of a hair product, contributes to the salon's income. Jane records every transaction diligently, using her accounting software. Lunchtime rolls around, and it's time for Jane to pay her suppliers for the hair products and nail polish she stocks in her salon. These expenses are recorded too. At the end of the day, after the last client has left, Jane sits down to review her financial records. She checks the income she's earned from her services and product sales and the expenses she's made throughout the day. She also takes note of patterns, which services are most popular, which products are selling fast, and if there are any unexpected expenses. As you can see, managing finances is an ongoing task for small business owners like Jane. It's not just about numbers, it's about understanding the story those numbers are telling about your business. With a clear view of her business's financial health, Jane can make informed decisions and plan for her salon's future. Now, let's step behind the counter of a small grocery store. Imagine being in the shoes of a store owner, Mike. The morning begins with Mike stocking up the shelves with fresh goods and placing price tags on each item. Each tag represents a potential income for his business. As customers stroll in, they pick up items, bringing them to the counter for checkout. Each transaction, whether it's a loaf of bread, a carton of milk, or a packet of cookies, adds up to the shop's income. Mike, like our salon owner Jane, records every transaction using his point-of-sale system. But it's not all about income, there are expenses too. Paying for utilities, restocking inventory, maintaining equipment, and even the coffee Mike drinks to fuel his long day, all contribute to the shop's expenditures. At the end of a busy day, Mike reviews the day's earnings and expenses. He takes note of which items sold out quickly, which ones are piling up on the shelves, and if there are any unexpected costs. This review helps Mike understand the financial health of his shop and aids in making future decisions. Even, and especially in a small shop, financial management is crucial. It's about understanding the story the numbers tell about your business and using that information to steer your business in the right direction. Finally, let's take a look at how a restaurant owner manages finances. Picture yourself as the owner of a bustling restaurant, Laura. Her day starts with planning the menu based on customer preferences and seasonal availability. Each dish on the menu is not just a culinary delight but also a financial decision. Ordering supplies, whether it's fresh produce, meat, or spices, involves careful budgeting and negotiation with suppliers. As the restaurant doors open and customers start pouring in, each dish ordered is an income for the restaurant. From the appetizers to the desserts, every plate served represents a financial transaction. The restaurant's point-of-sale system records these transactions, just like Mike's shop and Jane's salon. But the financial story doesn't end with the last customer. Laura also has to account for expenses, the cost of ingredients, utilities, staff salaries, and even the background music that creates the perfect ambiance. At the end of a busy day, Laura reviews the day's earnings and expenses, taking into account the cost of every dish served and every dollar spent. She notes which dishes were the most popular, which ingredients were used the most, and any unexpected expenses. This review helps Laura understand the financial health of her restaurant and plan for the future. Running a restaurant is like cooking a complex dish. Every ingredient must be measured accurately, and every step must be executed perfectly. In a restaurant, every dish served and every dollar spent counts. Understanding and managing these financial details is the secret recipe for a successful restaurant business. You might be wondering, how exactly do I manage my business finances? Don't worry, we've got you covered. Firstly, it's essential to set up a separate bank account for your business. Mingling personal and business finances can lead to a tangled web of confusion come tax time, not to mention potential legal issues. A separate business account will help you keep track of income and expenses, making it easier to manage cash flow and calculate your taxes. Next, consider investing in accounting software. This isn't just for large corporations. Many software options are tailored for small businesses, offering features like invoicing, payroll, and expense tracking all in one place. This software can automate many financial management tasks, freeing up your time to focus on growing your business. Now, let's talk about financial statements. These are your business's report cards, providing a snapshot of its financial health. Regularly reviewing these statements can help you understand where your money is going, identify potential issues before they become major problems, and make informed decisions about your business's future. There are three main types of financial statements: the income statement, the balance sheet, and the cash flow statement. Each one provides different but complementary information, so make sure to review all three. Lastly, don't be afraid to seek professional help when needed. Managing small business finances can be complex, and sometimes it's worth hiring an expert. A good accountant can help you navigate tax laws, optimize your financial processes, and provide valuable advice to help your business thrive. Remember, investing in professional help now can save you money in the long run by avoiding costly mistakes. In conclusion, managing your small business finances involves setting up a separate business account, using accounting software, regularly reviewing financial statements, and seeking professional help when needed. It might seem daunting at first, but with a little practice, you'll soon become a pro at managing your business's finances. By following these steps, you can take control of your business finances and set your business up for success. Let's quickly recap what we've learned about small business finance management. We've drilled down into the nuts and bolts of why financial management is crucial for your entrepreneurial journey. It's not just about keeping the lights on, but about fueling growth, maximizing profits, and securing tax savings. We've delved into the basic principles of financial management, from understanding income and expenses to mastering balance sheets and cash flow statements. These aren't just fancy terms, but the building blocks of your business's financial health. We've also explored practical steps you can take, like setting up a separate business account, employing budgeting tools, and maintaining a consistent review cycle. These strategies are not one-size-fits-all, but they provide a solid foundation upon which you can build your unique financial management approach. Remember, managing your business finances might seem daunting at first, but with knowledge and consistency, it can become second nature. So take the first step today and set your business on the path to financial success.